Earth, Wind, and Fire there, and Morning Dave here. This is the Early Morning Show. Appreciate you being here every morning. It's time to go on to a daily event.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And that means the daily event is to check in and find out what Wall Street's doing 2 and 4 hour money. On the telephone with me, Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. It is, getting ready for Labor Day weekend where things kind of chill out, and then summer, I guess, will officially be over, right?
Oh, you had to remind me of that. It's always funny. I mean, I'm from up north, and it was funny on Labor Day. It was like somebody threw a switch. The overnight lows suddenly ratcheted down by 10 degrees. The afternoon highs ratcheted down by 10 degrees right after Labor Day. Down here,
we could only hope for that down here.
Yeah, we got another 45 to 60 days of summer ahead of us, so it's a day off, and that's about the extent of it. Setting up the morning here down the line, yesterday we ended up with a green day overall. I mean, the Dow took back some of its losses from Monday, and again, we're up another 147 points on the Dow. Standard & Poor's up to a new closing record, up 15.5. NASDAQ up by 46, and all three indexes are in nosebleed territory again. And then the market closed, and then we got NVIDIA. And you and I were talking about that. NVIDIA pretty much is one of those stocks that was kind of like Apple was for all those years. Yeah, beating the street is a given. The question is how much they had to beat by. And evidently, with a couple of blemishes on the report, they didn't do what the investors had hoped they'd do, I gather, huh?
No, they beat on earnings, they beat on revenue. So everything really looked good. One of the areas, though, that they really watch for, one of their segments, is their data center revenue. Mm-hmm. And data center revenue was off by almost 2% from what was expected. And Dave, that's 2 quarters in a row now that their data center revenue has missed on the revenue number.
I never even considered them as being a provider of server services of that sort. I've always pictured NVIDIA as a hardware maker, and when you look at them, 56% revenue growth. Boy, tough room if you're not happy with that on the bottom line, is it?
Yeah, it really is. I mean, they beat by 4 cents a share. And so one of the things that they looked at too, analysts were talking about, was they've raised the price target again on NVIDIA. Like Jefferies has raised the price target to 205 a share. And it was either JP Morgan or Goldman. I can't remember off the top of my head. They raised the price target to $215 a share. And right now it's trading at call it 281.
So basically, they're going to become the world's largest company, even by a wider
I said 281.
The analysts are right.
I think I said 281. It's 181. Sorry, 181 a share right now. Yeah. So
that's about 20% increase they're giving it for a target. Like I said, the biggest company on Wall Street is expected to get even bigger. One company shouldn't be an entire market mover, but when you get a glamour push like that, it pretty much put a pall on everything on the overnight futures. We kind of needed a little shot of adrenaline this morning, and it looks like we might have gotten that off of the gross domestic product. They look at it 3 times for each quarter. This is the second look at the second quarter gross domestic product. We were all kind of pleasantly surprised when the first reading was a 3% growth in our output of goods and services. Well, analysts were expecting 3.1%. The report came out this morning, and we're almost overheating all of a sudden, Phillip. 3.3% gross domestic product growth. Anybody that says we're in a shrinkage mode, probably needs to look at the numbers. Wouldn't you agree?
Yeah, Dave, that's the deal. I mean, we look at what that number looks like right now, and that's a pretty good growth number, right? I mean, it's you like growth to be around 2.5 to 3% on an annual basis, and here we're at 3.3. Dave, that may be considered on fire, right? We're moving up relatively well, and you got to wonder though what impact that might have on the Fed, right? If things are good, if employment's where it needs to be, and growth is where it should be, and inflation, even if it's under control, why would you mess with interest rates when everything seems to be firing okay?
That was my initial reaction, too. I mean, a little hotter than expected gross domestic product doesn't indicate a need for more stimulus from the Federal Reserve. The other side to that, too, just old school econ nerd here. Generally, when you get an overfiring economy that's kind of overshooting what was expected, that tends to be a harbinger of inflation warnings as well.
Exactly. So we don't want it. We don't want it to overheat, right? Because then that just, you're right, starts to add to inflation, which is the one thing the Fed doesn't want. They want inflation to come down. Um, so I'm not sure how this will factor into their equation when they start trying to figure out what to do. But I guess tomorrow we may have more answers too, Dave, because the PCE, which is Paulson's favorite number, comes out tomorrow.
I was going to say the GDP number today just added a little bit more heat to the personal consumption expenditures inflation rate, and we're expecting that out tomorrow. The expectation for the core number, that's the more stable stuff that actually goes up, ratchets up, and stays there. They're expecting it to show an annualized rate of 2.9%, staying under 3, but a little hotter than last month's number. If we overshoot that number, I'm kind of expecting that CME odds makers tool to go down for the odds of an interest rate cut next month.
Yeah. So we'll see. That's going to be interesting
Yep.
to see what those numbers come in at. And then, how the Fed, how do they chew it up and what do they do with it and how do they decide what to do with interest rates?
And we'll get a really good idea as to whether or not they can feel political pressure over at the Federal Reserve. They say they can't, but if none of the indications objectively say it's time for an interest rate cut and they do anyway, okay, I think my impression of independence just went down a little bit for the Fed. Tidbits from companies around there. American Eagle, all those fancy jeans from what's her name? I'm having a brain flatulence moment. They got a new model. The Kelsey brothers are now endorsing American Eagle jeans. Travis Kelce has good jeans and a hot fiancée to boot. I just figured I'd throw that out too because Sydney Sweeney caused such a stir when she showed up in their billboards. Any other reports other than NVIDIA out this morning to give us
We
an
actually
indication of direction?
got several retailers, Dave, came out. Dollar General, they popped their stock kind of popped this morning. They beat on first on the earnings and revenue. They also raised their full year earnings and revenue growth, and that also then helped the other things like Ali, Five Below, Dollar Tree. Those guys, they're trading up almost 4.1% today. Five Below also reported they beat on earnings and revenue as well. They raised their third quarter and their fiscal year revenue guidance. And they're up 4% this morning. So the low end discounters seem to be doing okay.
Yeah,
On the
two in a row. I'd almost take that as the beginning of a trend there, wouldn't you?
Yeah, but let's flip gears now to Urban Outfitters, not quite the discounter. Um,
No.
they beat though on both revenue and earnings. On earnings, they beat by 10 cents a share at $1.58. Um, so I'm not sure why they are falling this morning, but they're down 2.5%. So there must have been something else in the report that I'm not getting that gave some indications there. The last one I have for you today, Dave, is a big name in sporting goods, and that's Dick's Sporting Goods. They reported They beat on earnings by 6 cents a share at $4.38. Beat on revenue. They raised their full year sales and earnings guidance. So I would expect them to be doing well, but they're trading down about 1.33% this morning.
I said, tough room. You got to either cream the street or do something really surprising if you want to. Resetting the table, it was a green day on Wall Street yesterday. Couple of events before the market opens. The NVIDIA stock report last night, and now the GDP and some interesting earnings reports. 45 minutes before we open, what are we looking at so far?
So right now, Dave, we've got green ink. I will say that. It's been holding steady now pretty much since the GDP number came out. The Dow's up $72, which is right in between 1/10 and 2/10%. S&P 500 is up 4, which is down up a little less than 1/10%, and the Nasdaq 100's up 5/100% at $10. So big winner right now is the Russell 2000, up 0.5% or $12. So on the other side of the coin, we got silver. Huge jump, Dave, up 1.1%, back over $39 to $39.15 an ounce. And gold up 0.25% to $3,457 an ounce. Crude oil higher than what it was yesterday at $64.11, and it's down less than 0.05%.
I was going to say, I noticed it was down from the overnight close, but up by about 50 cents over what we had yesterday morning, so I'm not overly pleased with that. Looking across the pond, the Asian Rim market generally up. The Chinese mainland markets both up by well over 1%. One of them was up 2.25% at the 6 a.m. close. They seem relatively happy over there. The European theater, mixed bag this morning. The average European index almost dead flat. I got one up by fractions and one down by fractions. We got a mixed bag. Nobody's moving really heavily in any direction, but it's upsy downsy over in the European theater this morning. Getting my retirement plans together takes a pair of eyes that involves looking at the unneeded risk as well as the hidden expenses in my portfolio. How do I find you to sort those out?
Dave, that's why I created the Core Retirement Design to help people design the retirement they always dreamed of, to make sure they understand what they have, what they're paying for. Give us a call, 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back together again tomorrow morning, one more time to tie the ribbons on the week. You have a good day, Phillip, and I'll see you then.
Talk to you later.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. One more day this week. Tomorrow, join us then. Bye.